as China continues to ease restrictions, Hong Kong is actually in a very unique position, which I did want to point out in this video. And so guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel, and let's dive right into this because this is very interesting. I think this particular video will do a lot to dispel some of the FUD that we are fed from the Western media as it relates to vaccination rates in China. And so let's dive right into it. So notice guys that this article came out on December 8th, so it's a little bit old, but it's still relevant. And so what this article is essentially saying is that Hong Kong has further eased isolation rules despite the ongoing surge of Omicron cases in the country, but they are maintaining their social distancing measures over the holidays. And so that's fine. And effectively what those measures are is residents and arrivals infected with COVID-19 will be allowed to leave isolation on the 5th day if they test negative for 2 days in a row beforehand. So those are pretty reasonable, and this is what's still maintaining right now as we're still in the holiday season. And so that makes a lot of sense for a country that's slowly trying to enter or exit their zero COVID protocols. And as you can see here, the article goes on to say exactly what I just mentioned, where, you know, there is a continuing surge happening, which is keeping them from lifting their social distancing rules over the holiday seasons. And of course, anybody who's infected with COVID as they arrive into the city or area will be isolated for 5 days, and they will be able to leave isolation if they test negative for 2 days. And of course, these measures will remain in place over Christmas and effectively the holiday season. But here's the interesting thing that I wanted to point out, and this sort of dispels some of the FUD. Notice the amount of the population that has received the first dose, the second dose, and the third dose. This is a virtually 100% vaccinated population. Now, for those of you who do live in Hong Kong, and I know some of you do live in Hong Kong that watch this channel, please let me know if those vaccination rates are correct or if this is additional just misinformation. But it sounds to me, or it looks to me, like Hong Kong is very vaccinated. And what it tells me, at least, is that, you know, these larger city areas in China will probably be okay as it relates to opening up, especially as they move from classifying a COVID infection from sort of like a level A to a level B. So you don't necessarily have to go to the hospital if you have mild symptoms. Plus, you know, as I said in the previous video, people who are experiencing mild symptoms can go to work once, I'm sure, as they feel better and can work. And so, you know, you're making a lot of progress as it relates to moving out of the zero COVID policies. And so the question I have we seen a COVID surge that's deadlier in China than we saw in the rest of the world? And I don't think the answer is any different than what we saw in the rest of the world. And that's largely what this article is suggesting. And you can take a look at that here. So note that they're saying that the proportion of patients in Hong Kong, as of at least December 8th, placed on a ventilator remained at less than 1%, and Hong Kong's tally now stands at effectively 0.5% of deaths for people who are infected. So, you know, this largely reflects the rest of the world, I think, and I mean, you guys might disagree who know the stats a little bit better than I do, but, you know, effectively what it's telling me is that I think they're experiencing this because they have a very highly vaccinated population. And this, you know, bodes well for me when it comes to thinking about how these cities will operate once COVID rules are completely gone. I think they're going to be just fine, which could potentially be a catalyst for these stocks to surge a little bit. I mean, Alibaba is trading well under $100 per share. And so, you know, can we see Alibaba back in the 100, 120, 150 range? Maybe, or that might be wishful thinking. You guys let me know in the comments what you think. Will we get a post-COVID reopening surge, or are there just other reasons why Chinese stocks will remain lower, at least for the first half of 2023? Now, it's coming out that one of the reasons why China moved away from its zero COVID policies, of course, one of the main reasons is the protests, but notice that there was a letter sent from Foxconn's founder to the CCP to ease zero COVID rules. And recall, guys, that Apple uses Foxconn services to assemble iPhones in China, and recall that Apple is looking to diversify where they're producing these phones and moving some production into India. Now, moving into India is easier said than done, but that should put China and, of course, Foxconn on edge to make sure that they can provide these products and not enter into this sort of like perpetual zero COVID cycle, which they've kind of been in over the last couple of years. And so here's the article going into a little bit more detail. So a letter from the founder of the world's largest largest iPhone assembler, played a major role in accelerating the CCP's plans to dismantle the country's zero tolerance COVID-19 policies, of course, according to people familiar with the matter. I always highlight that just to remind you guys to take all of these with a grain of salt whenever these newspapers report without sources. And so Foxconn Technologies Group founder Terry Gou warned that strict COVID controls would threaten China's central position in global supply chains, and he demanded more transparency into restrictions on the company's workers. And I think that's pretty reasonable. If you're gonna, hold people to zero COVID policies and these rules, you want transparency as to what the rules are. And it sounds like there was some frustration by Foxconn with the CCP with respect to how they are rolling out these rules and these measures over the last couple of years. And it obviously impacted Foxconn, as we reported previously when we did say that Apple was looking to geographically diversify. And of course, after the letter was sent, the government's tone on COVID began to change. And so the People's Daily newspaper, which is, I guess, the mouthpiece of the CCP, described the symptoms of COVID as often short-lived and mild. And that's huge, right? Because they never used that sort of tone before. And so the description was a departure from the previous government's narratives that emphasized the severity of the disease and the potential long-term health implications. So this is an indication that the CCP still cares about commerce in the country and is not as anti-business as many anti-China investors believe them to be. I am still very much in the camp that the CCP wants China to have the largest economy in the world. They want to surpass America, and the only way that they will do this is by being pro-business. They're not going to, cut off the heads of their double dragons, which is Alibaba and Tencent. They're going to allow these companies to flourish so long as they don't take advantage or take sort of like monopolistic positions on any industry. And I don't think that they need to take monopolistic positions on any industry to continue to be successful and to provide us, the shareholders, with reasonable returns. Now, these new rules that the CCP rolled out, notice that it does look like they've left room for different interpretations by local governments, and I think that's good, right? Have a local policy stemming from an overall directive. But it worked the other way, I think, because some continue to impose lockdowns as COVID cases rose to their highest levels in China since the start of the pandemic. Now, remember, guys, that the CCP subsequently did roll out measures where I think it was 24 measures. I can't remember exactly what it was, but they did say specific things that the local governments can't do. For example, like block off whole property blocks, etc., etc. And so, I think those measures were aimed to sort of address, government officials in local areas being too stringent with lockdown measures. And so I think overall we're moving in the right direction. Now, the other thing that I do want to point out in this video is that I mentioned that Apple is looking to geographically diversify. Now, some of you guys were saying in the comments of the previous video where I talked about Apple geographically diversifying that it might not be a bad stock to invest in right now. But in order for you to really gauge whether or not Apple should be a stock that you would be looking to invest in or not is by really understanding the story of the business and forecasting out their business correctly. And I just think a lot of people follow the story, but they're not necessarily building models. And so you guys may not necessarily have a model on Apple, but at least allow me to share mine. And so you can see this is the historical performance for Apple. And you can see that it's largely been, a big story as it relates to services, but a relatively good story as it relates to the iPhone and wearables. So notice that the iPhone doubled from $100 million of revenue in 2014 to $205 million of revenue in 2022. And so that was a 9.2% revenue growth CAGR. And then wearables doubled as well, or a little bit more than doubled. It went from 18 million to 41 million. And so 11% CAGR from 2014 to 2022. That's really good. And so, that's why I say iPhones and wearables, they doubled in the past 8 years, which really helped revenue growth. But here's the thing, and a lot of people miss this. When it comes to Apple, the big story for revenue growth over the last 8 years has been the 10xing of services revenue. Notice that services went from 8 million to 80 million, or a 32.2% CAGR. And so as you think about Apple, as growth into the future, you really cannot forecast revenue growth at this line. I think a lot of people are making the mistake here. And so, as retail investors, you guys got to be aware of this. Do not forecast revenue ever on this consolidated revenue line because you'll make a mistake, right? I don't expect 40% to repeat itself. I don't even expect 8% to repeat itself. So how do I see revenue growing out for Apple into the future? Well, the overall story is that the next 10 years are not, keyword not, in my opinion, and this is not a recommendation to buy or sell the stock at all, but you know, this is just what I'm seeing as I do my own research, which I love to share. And so the next 10 years are not expected to carry the same levels of growth that the past 10 years did. This is how I'm seeing the iPhone growth roll out. So I'm expecting around 5% in 2023 to 2026, and then it slows down a little bit in 2028 and beyond. Same thing for Mac. And then, of course, I don't see overall sales growth for iPad. I really hope they give us some indication as to why they think the iPad's growth will increase. But the other thing is, can we see declining sales for iPad? I don't know. You guys tell me in the comments. And then wearables, I just see wearables slowing down again. So, you know, same trajectory as iPhone and Mac, where it's 5% for the next 5 years and then 3.8%. So that's effectively 75% of the 5%. And then finally, the one that you're really worried about, which is the services. Once again, if you're not increasing the number of iPhone sales and you're not rolling out new services, are you making your services more valuable so more and more people subscribe who don't have them? I don't think so. I'm not seeing it. And so I'm growing services out at around 7.5%. Now, I think I'm being a little bit optimistic with this 7.5%. I think services can slow down even further. And so I want you guys to let me know how you're growing out each segment. If you feel strongly that I'm being a little bit too pessimistic, or am I missing something? So let me know in the comments what I'm missing and why I should be growing out these segments at a higher clip than I currently am. And so what that really comes down to is, how does this impact the valuation for Apple at the moment? So you can see here, using a terminal multiple of 15 times earnings, I'm valuing Apple at approximately $110 per share. You compare that to the current share price, it's trading slightly above its intrinsic value. Now, if you were to say, hey, listen, I'm going to use a higher terminal multiple, and you throw that to 20 times earnings, it will approximate the current share price. So you can say, depending on the multiple that you want to use, that Apple is either slightly overvalued or reasonably valued. But in any case, it's not giving me enough of a margin of safety where I'll consider purchasing the stock. And so I think Apple has a lot of room for a downward surprise in 2023, especially as the economy slows down. So I'm keeping an eye on this stock. Look, Apple is one of the greatest companies on the planet, and it is a company that I would love to include in my portfolio, just not at the current valuations. But I want to know what you guys think. Do some of you own Apple? If you do, why do you own it? Also, if you own it, or even if you don't own it, I want to know what your valuations are. What am I missing out on? What am I not thinking about? Now, in order for you to get access to that model that I just showed you for the Apple model, or any other model that I have, which includes Alibaba, Google, anything, you can get access to all of those models at that $5 a month tier. Now, if you want to join us for an Epic Live presentation every month, you can join us at that higher tier. Now, the other thing that I do want you guys to pay attention to is, I recently did a full model and valuation on Tencent, which I believe is one of the strongest companies in the world, especially in that gaming sector and the cloud computing sector. In fact, I believe that Tencent might actually take over Alibaba even in the cloud segment. And so I really hope that that happens. But ultimately, if I own both stocks, it doesn't matter. I'll win on the cloud space. But if you haven't seen that video, no problem. I will link it right here.